So as mentioned, I'll briefly take you through. So Vikram Gupta, as you know, is the founder and managing partner of Ivy Cap Ventures. He is a graduate from Weathered School of Management and also an alumnus of IIT Delhi. And of course, we have Sushant Mitra, who is the founder and CEO of Lead Angels Network, with nearly 2 decades of working with startups. He was the first external CEO for Sign IT Bombay, which is the incubator for IT Bombay. Our lead angel portfolio includes marquee names, example, Shop Kirana, we got Planet Superheroes, we got Hello Verify, Super Daily, among others. And lead angels provide 360-degree support to startups from incorporation to follow-on funding. And as we call it, it is from cradle to nirvana, whether you have an idea and you want to incorporate the company, and or you have a company wherein there could be a lot of value that could be unlocked through an acquisition. We help you right through all these stages, apart from funding and helping you raise funds. So Kruti, are we good to go? Shall we start?
Yes, we're good to go.
Okay. Aditya, if you can allow me to share my screen.
Yes, Manish, you can do it now.
So good afternoon to one and all. Your host today is Manish Johri. I represent Lead Angels in the capacity of Senior Vice President. I look after the network globally and ensure that we have the right kind of engagements for the members, and the interactions between portfolio companies and the members is there. So at Lead Angels, as we said, we go beyond angel investing. And this presentation is about what investing in startups is all about. So, I mean, startups, we can think of them as, cute little babies, as this baby gorilla is there. And they start out, they're very fragile, they're very delicate, and very cute little things, like Google when it started out. It simply gave you a very good search engine. You search and you will get it. Beyond that, it didn't do anything at that time, at least. And in today's time, if you see, what is the global logic for startup investing? Number one, real estate markets are on a long-term correction. We will have a slow economic recovery due to second and third waves of COVID-19, which may pan out to be COVID-21. Fingers crossed on that. But yes, we are already seeing the second wave starting out in Europe. And stock markets, companies that are leveraged beyond 1:1 at least, it's a roll of a dice how they will fare, whether it'll turn out even or odd. And gold is stronger, but the kind of gains that you can get from gold may not be as much as what other segments may permit. And also the consumer demand will slow down because the remunerations and the spending capacity of people will get affected due to the pandemic effect. And startup investing in fact has been selective, but has been largely unaffected. So as I was saying, what we saw as a cute little baby that was Google when it started, today is Alphabet, or which encompasses, I'm like, if you have your mail, you have your search, you have your Google Home. I mean, if you're talking around your laptop, your phone, you will get ads which are focused around what you're talking about. Okay, and what it leads to is, I mean, what starts out as small can actually lead to big, very high dominance. Okay, we have it in the example of Facebook, Uber, WhatsApp, Airbnb, Amazon, Google, Twitter. Across all of these, if you see, many of these are larger than economies of the developed world nations also. What are the key learnings from post-COVID world? I mean, bricks and mortar businesses have considerable risk compared to startups. Supply and distribution chain have had very high bottlenecks, and there's a sudden shift in consumer demand from offline to online, apparel and travel to food and health, and you have brand shifts to lower category products and services. There is a premium on convenience and technology adoption. Digitization, or the digital transformation as I call it, has been enhanced or accelerated. What is supposed to happen probably 3 to 5 years hence has already happened now, or is already happening now. Okay, across finance, across retail, and as I say, startup risk is not so high in the digital companies, in the digital technology companies, while the listed stocks, the brick and mortar ones, the risk is not so low. That is the reason we have a lot of interest coming in from startup segment. The investors wanting to look at startups as an asset class, as an alternative investment class. India, as we know, and like for any founder, what he is looking at is problems that he can solve. India, as we can see, is full of problems. I mean, you have a good product and you have enough number of people who are there to take on your product or services. And like whether it is a finance, whether it is infrastructure, whether it is transport or it is mass transport, we've got enough problems that can be solved, that are waiting to be solved. Okay. As they say, India is still work in progress. Economics apart, social and cultural changes in India are super strong. And demand constraints don't exist if your product or service is priced correctly. Education, transportation, housing, financial services. So to each of these, we can add a suffix which is called TECH, that is ed tech, transport tech, housing tech, fintech, and food tech, and fashion tech also, in fact. Okay. And so you have enough blue ocean markets available in India with the possibility of 3 to 4 winners. And India, unlike other markets, is not too privy to monopolies like most of other developed markets. So we have space for more than 2 players also in many a segment. As we can see, we've got Flipkart, we've got Amazon, we've got Jio, we've got BookMyShow, we've got InMobi, Paytm, Swiggy, Zomato are there. You've got Ola. All these are there. And so why smart investors are looking at startups? Number one, hyper growth and swifter and capital efficient market dominance. Focus on intellectual property and customer data as competitive advantage. Active investors engineer M&A to maximize value, because maybe one of 100 or maybe one of 500 companies will go for an IPO, but your value unlocking is a lot to do with mergers and acquisitions in the startup ecosystem. Case in point is we've seen across Doubtnut, we've seen White Hat Junior, we've seen companies getting funded and growing by leaps and bounds. Vedantu, which was a small little baby, or Byju's, which was only housed in Bangalore, is today a decacorn valued at $10.5 billion at the last count. Okay. What are the benefits of angel investing? You can get hyper returns and estimated IRRs of around 20 to 30%, spanning across 4 years, 5 years plus. Okay, you learn about new technologies, new applications. You can actually, you can give back to the entrepreneurs by supporting them and guiding them through and helping them get financial and social returns, and of course by supporting entrepreneurs who are making a difference. Okay, as a singular angel investor, you will have these problems. Where do you find quality startups pan India? How to evaluate them? Once you've evaluated them, who will do the due diligence, documentation, and filings for ensuring compliance? And post-investment, who will ensure the monitoring and support to your portfolio? Apart from that, when you are looking at the next raise of funds, who will be there for you to help them raise funds or engineer an M&A around your portfolio? That's where angel networks come in, wherein we have full team, full-time teams to curate startups. We use collective wisdom, leveraging the network effect for evaluation, and we have professional third-party due diligence to ensure that you have all the T's that are dashed and the I's that are dotted, and you're not getting into something which can land you into a legal trouble going forward. Okay. Post-investment support and monitoring of the portfolio is a given with angel say networks. And here, essentially, what happens is the community evaluates while the individual decides. Okay, you use the collective wisdom of the network while your decisions are solely individual. Okay, lead angels, as I say, is a full stack. We have a full stack advantage. We have one more baby that has been added to it, which is the academy piece, wherein people who have an idea and are looking to elaborate on it, we have an academy which can help them through to take their idea to the next level. And then we have the labs, which will help that entrepreneur incorporate a company to provide his company offering, his products and services. We have the network, which funds as an angel, and we have lead advisory services, which helps in the next round fundraise for our portfolio, and also help with mergers and acquisitions wherever required. We are one of the very few who have a focus around the sub $1 million to $5 million, $10 million kind of bracket, wherein we can take through all of these services. Very few people can really say provide value around this range. Okay, our investment process is there. We choose from 100 companies, we choose 3 opportunities every month. Actually, we choose 6 companies, of which 3 are shortlisted by the investment committee. And based on these 3 companies, when they pitch based on investor interest, we go into deep dive business review. Once that is found interesting enough by the deal leads and they are looking at investing into it, we have an investor call and get our commitment across our members globally. And post that, we take on a legal and financial due diligence, which is carried out by a third-party due diligence partner. Once all clear is there, then we complete the investment documentation. And of course, we get into the money transfer to the bank, which is called the MITB, money in the bank for the startup. And then is where the actual work begins, where is post-investment monitoring and support along with the selected member who was the deal lead and who could be the board observer or investor director. Okay, this is some of our portfolio companies that have been there. We've got Hello Verify, we've got Okipoki, we've got Zestil. That's our team. Sushanto Mitra, our founder, who will be having on the chat. Venkat, he's on our board. He is a partner at Avishkar Frontier Fund. Atul Pradhan, he is into high-end financial and management consulting, and was the managing partner of KPMG Consulting. We have Suman Sen Gupta, who heads the professional services side, and he is also our go-to guy for all things, say, related to finance and compliance. That's me, so Manish Johri, got 2 decades of experience. Kruti Rayani, she's very passionate about B2C and consumer-oriented technologies, products and services. And so, as I say, her focus is D2C brands, that is direct to consumer. We have Fenil Zaveri, we have Ishan Jindal, and that's essentially what we are about. I hope I have not put you all to sleep.
If there are any questions, we can take 1 or 2 questions now from the audience about angel investing.
You all can either send the questions in the chat section or even, go off mute and directly send it out to Sushanto as well as Manish.
Sushanto, would you like to begin with somewhat on what?
Sushanto, we have 2 questions in the chat section. You're on mute.
Okay.
Go ahead and answer those questions, please. You can read them out quickly. So,
Amit, how can I join as an angel investor? That is by Amit Raj Gogia. Amit, Adil will connect with you and tell you all the details of how you can be a member of ours, and he will take you through what all are the processes that are place, what are the various things, what are and what all is the requirement. We have KYC requirement and we have a membership fee. We've got some listing on it. So Adil will connect with you. If you can share your numbers with Adil, or Adil, can you say message him on a personal this thing and share your number with him?
Sure.
Adil will get in touch with you. Okay. Sanjay, yes, we are interested in health tech, and also we are interested. We have an agri-tech company also that we are say working with right now, and anything which we feel has a potential to capture a large market with sustainable moats around it. And as we said, India across the board has n number of problems. You name the sector and we have a problem over there. So yes, we have startups across all these things, including health tech. Venkatesh, are you investing into B2B manufacturing industry related services? We refrain from capital intensive, which is say capex intensive businesses. That is, we stay away from. And Sanjay, again, Adil will be getting in touch with you. If you had filled up a form, Adil would have your contact details. He will get in touch with you right through this thing, and he'll send you a mail also on that. And Sagar is asking, while shortlisting a startup, what are the prima facie things to look for? It's an art and a science both, Sagar, and that's what we will take through right now. Sushanto and Vikram will take us through. What is the crystal gazing that we do? What is the legacy that we look at behind the startup or the founders? And Rahul says, Sushanto, amazing book with Dhruv. Sushanto and Dhruv, kudos to that. A lot of entrepreneurs are benefiting from that. So again, this is again an initiative from the side of it. We try and do a lot for the startup ecosystem, whether a lot of our learning is encapsulated in that book.
So we'll share that link. Somebody can share the link for the book. Thank you, Rahul.
Thanks, Rahul.
I'd like to acknowledge the presence of Vikram Gupta, the partner from Ivy Cap here. So maybe we can. Hi, Vikram. Thanks for coming.
Hi, Sushant.
Hey, Vikram, how are you doing?
Hi, Manish. Good, doing well. Thank you so much for having me here.
Thank you so much for joining us and taking our time on a lazy weekend. And so as I mentioned earlier, Vikram is an IITD alumnus. He has been an entrepreneur himself. He's been part of funds. He's been a part of healthcare fund also, and he is also the founder of Ivy Cap Venture, which has done some marquee investments. And he's a major torchbearer for entrepreneurship and investments at IITD also, apart from being in Bombay. Sushanto is also a Delhiite, if you see, because he's a Stephanian from his background. And but both of these gentlemen are making name for themselves in the finance field, sitting in Bombay, which is a financial capital. So over to you, to both of you founders, one on the angel side and one on the VC side. Let the fireside chat begin. Over to you, Sushanto.
Thanks, Manish. Welcome once again, Vikram, to be here, and all the participants who've again taken a Saturday afternoon to be here. So, Vikram, I'm going to get, with the limited amount of time, I'll get straight away into the questions. You know, COVID as a disease has been very difficult to define, and it keeps mutating, and all the forecasts that anybody made about COVID have sort of fallen flat. And therefore, trying to establish what is the impact of that on business and investing is equally difficult. So I'm going to give the hardest problem here, to the VC sitting on here, is how do you see it impacting business, and what would you, in overall terms, and what would be your advice to startups who have either started off or are planning to start in the post-COVID world?
Yeah, no, thanks a lot, Sushanto. And I think this question is very relevant now, especially we have been through this since March in India, especially the lockdown started towards the second to third week of March. And I think, of course, different startups or investors have gone through different kinds of experiences. And I would say that it has impacted people in different ways. Of course, people have gone to the market during this time to raise funds for the first time. Of course, they've had much harder time. People who had just raised funds before the lockdown started, they were quite fortunate. I would say that, they were sitting on a lot of cash at that time, and businesses which were directly impacted, which were related to travel or hospitality, were directly impacted quite substantially. And on the other hand, any businesses which were anyways, moving digitally in specific sectors, whether it was healthcare or education, or generally AI, or machine learning or deep tech kind of startups. I think there is an acceleration of the activity in terms of investors wanting to invest in them, or investments actually happening in these areas. We've seen that happening quite a lot. Lots of people have also pivoted during this time. Of course, companies which are burning a lot of cash before the lockdown started, they moved to the immediately to cost cutting to make sure that their expenses were primarily supporting their core businesses rather than long-term things. So quite a few things, and in the overall picture, I think I would say that people who were handling this in a very matured way, in appreciating the situation like this can arise, and therefore are nimble to handle the situation. I think those guys have done really well. People who just got caught all of a sudden in a situation where they didn't know what to do. I think they got probably already sifted out. We also saw quite a few entrepreneurs going back to the job markets during this time. But I think people who've been able to sustain as of now, I would say that will benefit in the long term, because they will be able to showcase and they'll be able to talk about their stories of how they handled and dealt with the situation, and therefore be able to impress the investors.
Right. Thanks, Vikram. Yeah, it's a pretty you know we all startups have to deal with uncertainty, but this sort of level of uncertainty nobody could have foreseen, and I think it only makes people more resilient, and the ones who can morph and adapt to these new changes will do well, and those the evolution of startups has sort of speeded up by this process. Just from an investor's perspective, this is of course from a startup perspective, but if you look at from an investor's perspective, we are seeing increasing interest in the startup sector, because the stock markets are not performing so well. Real estate is there for a long-term correction, and we don't even they've already gone down by 30-40%, and it could go even more than this. And even bricks and mortar companies, which we thought were solid, they were made of solid steel and cement, they look like the most fragile ones around. So we've seen a lot of growth in an interest in angel investing during this time. Do you see that also from the VC perspective? Do you see that greater interest among people to invest in VC funds, and a greater interest amongst VCs to invest into more, I would say, digital type of companies?
Yeah, I would say that the initial phase when the lockdowns started in April, May, June, that quarter, as you rightly said, these shocks were very, very new, and people didn't even know what was happening, and therefore almost everybody was impacted. So I think that actually, anybody who wanted to raise funds in the market, there's no question about just, even going and talking to investors. There's a completely new norm of even how the meetings are happening. So I think we've all got used to this Zoom platforms. So I would say that from a VC perspective, if people, and we all know that India has really grown quite a bit from the time we started as Ivy Cap, 2011-12, when there were handful, just about few funds, to now. Especially last year, quite a few VC funds were registered with SEBI. SEBI has quite a large number of VC funds, almost about 250 funds, which are very actively looking to raise funds at different stages. But I think I would say that the funds who are very active in the market are about 35. which are actually, making active investments and may also be raising funds at different stages. Those funds, again, there is a problem, right? So if you look at the ones which are registered last year or, for the first time, I think if they were going to the market to raise capital or would have started raising capital just before this started, I think for them, it's going to be a really hard time. It's not going to be easy because, I mean, there's no track record to show, and investors have become very choosy and they want to talk to those who already have track record. The ones who are second time funds, uh, for them, I would say that depending on what kind of profile they have built, have they done any exits, and accordingly, I think there is a little bit of I would say difference there as well. But if you're going for a third time fundraise onwards, a third or a fourth or a follow on funds, there the interest is actually building up. In fact, what we've seen is that not just the Indian investors looking to invest in VCs, and as you said, people have not necessarily got the outcomes out of the real estate investments, are actually even pulling out. So those people are looking for alternative opportunities, and therefore the funds who have track records, they are able to attract that capital. So the India side there, and plus there is now a maturity level even amongst the investors, because they've seen over the last 10 years how this entire asset class has built up over time. But in addition to that, what is also happening is that with this entire geo story playing during COVID time, all of a sudden India has come up on the global map, and added to that is the fact that there was an anti-China sentiment because of various reasons. All those investors who were looking to invest in China, they are looking for alternative options, and good news is that India does at least have that opportunity in terms of attracting that capital. So I think I would say that it's a good time to actually go back to the market, talk to the right investors. If you do have a good track record to show, then the chances are very high to raise a good amount of capital.
Right. And actually, right. So we are actually seeing that interest. A lot of people who had not yet gone into the, this asset class, whether they are professionals or they're, second generation entrepreneurs who have been resisting to go in, take on the this asset class as startup investing, are now joining, which is, you would assume that in a crisis like this, everybody would withdraw and stay at home, but that's opposite of what is happening, and investors are seeing a lot of interest. We are seeing a lot of interest from investors who have hitherto not been in the startup sector. So therefore, is it, I just wanted to know, is it a good time to be investing in startups? That is one. And two, those companies who are, who sort of survived this, would your advice be to raise money now or wait for full recovery before they go into the next fundraise? So these are two different questions, but put together.
Yeah, if I look at it as an investor, I would say that definitely the quality of opportunities is clearly one can differentiate now. The good entrepreneurs and the people who have really survived this, and now there are a lot more stories to tell from entrepreneurs' perspective. How they handled this crisis, and what has changed over the last 8 months or so. And the business plans have also changed, primarily because of this entire move or shift which is happening from offline to online, and an accelerated shift which is happening. And therefore, if somebody was building a business to capture that market and is able to justify that, they've been able to capture that value, even if originally you might have planned that, as an example, you're selling a product initially in the offline retail, you've already placed your product, but for some reason you were not able to pick up your sale. But during this time, you got your presence on online channels, and you realize that your product has started moving faster, you're able to justify that you're able to really get the or take advantage of this entire shift. And I think there is a very clear picture that is emerging. So from investors perspective, I think we can clearly see the winners emerging, and therefore picking the right assets at this time. Valuations have been a little bit of a challenge still, because the ones who have not done well, valuations anyways don't matter. But the ones who have done well, they have stuck on to their kind of principles, in terms of they won't raise capital unless minimum valuation is given to them. And there you have to make a call. If you find these are good entrepreneurs who have you know um, survived this crisis. I mean, we're still in crisis. I won't say we have come out of it. So of course there is
Because the crisis isn't over. Yeah.
at least the first 8 months, at least a reaction to the crisis, and how you have actually prepared yourself even for the next 12 months, 12 to 24 months, is actually now being seen, how you're actually reacting to it. I think that is showing the level of maturity amongst the entrepreneurs. So as an investor, I think we can identify differences there. As an entrepreneur, on the other hand, I think very clearly, as I said, either if your business model is not working anymore, I think it's a real test for you whether you were able to pivot or have you given up. And the chances are that if you didn't have enough funds, or if you had not planned your cost structure in such a way that you could cut your costs to bring down your burn to zero, then people had real difficulty in continuing, and therefore will find it hard even to raise cash, and those will also get squeezed by the investors. But their investors may also be looking for good deals and just trying to somehow work on a pivoted model, with almost like a rebooting their business models. So that's also happening to some extent.
Sure. I can keep on asking questions, but if there are any questions from the audience, would love to, addressed either to Vikram or perhaps to me. We'll be very happy to take those. Please, put your question on the chat, and one of us will read it out for Vikram. But Vikram, going forward, how do you see, the next 3 years for the startup sector in India, and whether it's angel investing, VCs, entrepreneurs? How do you see the future?
I think India outlook itself is very positive. I will start with that first. I think, broadly speaking, I'm seeing very positive approach as far as the government is concerned in terms of the policy making, and government is quite actively involved with the VC funds, with entrepreneurs, trying to bring out policies which are encouraging more investments in the startup space. And they're also talking about bringing out a few fund of funds to encourage local capital itself. So that's one very positive move, and therefore availability of domestic capital is likely to improve substantially. And then, as I said, outside capital coming to India is also likely to improve, of course, except that recent policies in terms of the capital coming specifically from China and adjacent countries. I think, of course, they've had very specific pushback on that, but I think broadly there will be increased flow of capital. Then from the entrepreneurs' maturity levels perspective, I think very clearly we've seen the maturity levels have increased quite substantially, also because Indian entrepreneurs are also now able to attract money from VCs who are sitting in the US or elsewhere, because those VCs are also coming and investing in these entrepreneurs, and therefore, entrepreneurs are looking to scale their businesses beyond India. I think they're finding it now. They're finding a support system beyond India to take their startups outside of India, which is also a very positive thing, and I think it's likely to continue. On the angel side, and I think this is something which again I'm seeing as something which is going to happen more and more, is this entire kind of a connect between whether it's Israel or UK or Germany or US, the local startup ecosystems connecting with each other and wanting to collaborate, whether it's a product side or the consumer market side or investing side. That's also going to improve further. So entrepreneurs who are starting fresh, I think it's a good idea for them to really scan this market and just not look at India, but I think look at global markets. And I think there's still a lot of white spaces available. I think many times you start thinking of solving a problem and you think, oh, this guy's already doing it. Should I even do a startup in the same space? I've seen, I mean, I met an entrepreneur recently whose starting statement was, I do exactly what White Hat Junior does. And initial reaction is, if White Hat is already doing it, why would you want to do the same thing? But when you spend time, sit down with that entrepreneur, you realize that there's a huge space and there's a big opportunity there. And, you can do it the way, in
Absolutely.
a very different way.
That's the beauty of India. You think that it's been taken by some space has been taken, but you realize the opportunity is so great that you can, you can have 3, 4, 5, big players in a particular space. In fact, we're also seeing that a lot of overseas companies are getting in touch with us and looking to raise capital. We've just invested in a Canadian company, and we are looking at a US company to invest in. So yes, the global, the world being flat, thanks to Zoom, is actually making more international connections than before. But I think there are a couple of questions which have come, and Kruti, if you can read it or maybe address to Vikram.
Sure, just give me a second. Um, yes, so I think the first question is from Akash. How to make a career at VC and angel investing?
Many times people always think that being an investor is very glamorous and therefore somehow just get into that field. And I think one needs to really have that passion to be an investor or be part of a VC, and that passion shows very clearly. I mean, you need to have spent a lot of time trying to understand how this thing works. And if you're passionate about it, I think nothing is impossible. And if you want to be part of a VC, you beat funds around. As I said, there are you know exactly who all are there in the market, and I think you should go and meet with all of them and just show that you're passionate about it. Somebody will catch that and for sure
Definitely.
hire you.
Absolutely.
And for angel investment, I'm sure Shanto, you may want to kind of.
Yeah, absolutely. So, I think the first thing that, whether it is an investor or somebody who wants to join the team full time, I think the one thing that we want to see is passion, because this area, whether you're a VC or an angel investor, requires a lot of persistence. So you have to persist and you have to survive. And that is true. One question which has come is, which segment and industry are you most bullish about? Vikram, you want to have a go at that?
Yeah, so I think anything which is leveraging the entire shift to the digital world, and I think this is happening across sectors, right? I mean, we've seen this happening in financial services and healthcare and education, and even interestingly, one may think that hospitality and travel are probably gone areas, but even there are some interesting pivots emerging, which we are noticing that so the way we are looking at this is, if you look at it from the bigger picture perspective, of course, healthcare is one area which is actually going through some fundamental kind of changes, from the consumer behavior perspective. One big thing we are noticing there is this entire power is shifting from the hands of the doctors to the end consumer, or to the pharmacies, or to the hospitals. The doctor used to be the driver of the entire decision making. And with this entire digital penetration, it's moving very fast, and therefore any businesses which are built upon, doctor at the center of the model, I think that those things are shifting. Similarly, we are seeing the same thing, same trends in the education space as well. So anybody who is able to really see these changes happening,
Correct.
which are being driven by this entire digitization, I think those people are going to really benefit and create value much faster as compared to others.
Absolutely. Of course, as I said, Vikram, we can go on forever and we'll keep on, asking questions. But given the interest of time, I wanted to thank you for being here. Thank you very much. And
Thank you so
we
much.
will